The real cost of doing nothing. Every year, people make a quiet mistake. They leave their money sitting still. It looks safe, but it's expensive. Over a lifetime, that mistake can cost millions. John doesn't want that life. John just inherited $1 million. He has no mortgage, no kids, no desire to climb the corporate ladder. What he really wants is time. Time to travel. Time to think. Time to build something of his own. So he asks one big question. Can I live off dividends and be free? And if you don't have $1 million, what then? Dividends, yield, and the freedom number. To answer John's question, we need basics. Dividends are simple. Companies share part of their profits. They pay that cash to shareholders. Dividend yield tells you how much. If a stock is $100 and pays $3, that's a 3% dividend yield per year. So let's set a clear goal together. Imagine you want $2,800 each month. That's $33,600 every single year. At a 3% yield, you'd need about $1. 12 million. At 4% yield, around $840,000. At 5% yield, about $672,000. Same income but very different portfolio sizes. John tests Coca-Cola, safety with strings. John starts with something classic. He chooses Coca-Cola. Global brand. Long history. Steady profits. The dividend yield is around 3%. He invests the full $1 million. That gives him roughly $29,700 per year. About $2,475 per month in dividends. On paper, that sounds decent. He can rent a small apartment. He can buy food and pay utilities. But there is almost no extra room. No big trips. No buffer for emergencies. He feels safe. But also trapped. It's like living in a strong house with no windows. Johnson & Johnson, a slight upgrade. John wants a little more breathing room. He stays in the safe zone. This time he chooses Johnson & Johnson. A healthcare giant. A dividend king. It has increased dividends for decades. The yield is slightly higher than Coke. Around 3.1% at current levels. His million now pays about $31,100 a year. That's roughly $2,592 per month. It's only about $117 more each month. But it feels like a small upgrade. He can afford a slightly nicer place. Maybe some basic health insurance too. Still, he's budgeting every dollar carefully. SCHD, a smarter basket of dividends. Now John stops picking single stocks. He wants a smarter, wider base. He finds SCHD, a dividend ETF. It holds many strong US companies, all focused on consistent cash flows. The yield is around 3.8% today. He puts his entire million into SCHD. Now he earns about $38,200 each year. That's roughly $3,183 per month. Finally, his income feels more comfortable. He can cover bills and still have extras. Weekend trips. Occasional nice dinners. He also gets built-in diversification. If one company cuts dividends, others help. Usury, riding the energy wave. After SCHD, John gets curious. What if he leans into one sector? He looks at energy and infrastructure. Pipelines. Natural gas. Transport of fuel. He finds Usury, an energy ETF. Its yield is around 4.3% today. He invests the full $1 million again. Now his dividends are about $43,200 yearly. That's $3,600 per month in income. His lifestyle improves another step. He can travel more, save more. But energy is unpredictable and cyclical. Oil prices and politics can shake everything. Higher yield comes with higher uncertainty. Realty income, monthly rent without tenants. Next, John wants something more stable. He thinks about rental income. But he doesn't want tenant headaches. So he looks at REITs instead. He finds realty income, ticker O. It's called the monthly dividend company. It owns commercial properties and rents them. By law, REITs pay out most profits. The yield here is around 5.7%. John's million now pays about $56,800 yearly. That's roughly $4,733 per month. For the first time, life feels abundant. He can travel regularly and still save. But REITs can suffer when rates rise. UPS is a blue chip with big yield. John wonders if he can push further. He studies another giant, UPS. Big brown trucks. Global delivery network. It recently bumped its dividend significantly. Now the yield is around 7.5%. He invests the million in UPS stock. His income jumps to roughly $75,200 yearly. That's about $6,267 every single month. Now he enters true lifestyle territory. He can live very comfortably almost anywhere. He can help family and support causes. But shipping is a cyclical business. Recessions, labor costs, fuel prices matter. A high payout can also be fragile. AGNC, the temptation of 15% yield. Now John considers the extreme option. He discovers AGNC, a mortgage REIT. Its yield is around 15% right now. On paper, that looks insane. He runs the simple math again. 1 million at 15% pays $150,000 yearly. That's $12,500 every single month. He could live anywhere in the world. He could stop working immediately and completely. But the risk here is enormous. Mortgage REITs are extremely rate sensitive. Dividends can be cut fast and deeply. Share prices can crash in tough markets. Freedom with a ticking clock isn't real freedom. What John really learns from $1 million. After all these tests, John understands. High yield feels exciting at first. But stability matters more than temptation. His lesson is simple but powerful. Freedom doesn't come from the biggest yield. It comes from a yield you can trust. Plus growth that keeps up with life. But many people don't have 1 million. Most start much smaller. Maybe $100,000 saved. Or just a few dollars daily. So let's flip the script now. What if you only have $100,000 today? What if you are just starting out? Vanguard Total Market, owning the whole game. Now we switch to index funds. We start with a total market fund. This Vanguard fund owns thousands of companies. Big, medium, and small US businesses. It doesn't try to beat the market. It simply mirrors the whole thing. Technology, healthcare, finance, consumer stocks. You get a slice of nearly everything. Historically, returns have been strong. Around high single digits to low double digits yearly. The yield is moderate but reliable. With $100,000 invested, it grows steadily. After decades, it can reach several million. Most of that growth comes from compounding. Consumer Power, Vanguard Discretionary Fund. Next, we look at consumer spending. This Vanguard fund focuses on discretionary stocks. Think Amazon, Tesla, retailers, restaurants. These businesses grow when people feel confident. They spend more on lifestyle and upgrades. The fund is more focused and volatile. But long-term growth has been impressive. Returns have beaten many broad indexes historically. The dividend yield is lower but present. Most returns come from rising share prices. $100,000 here can grow very fast. Over 30 years, it can reach several millions. But the ride will be bumpier than broad funds. The S&P 500, slow but solid. Now we come to the famous one. The S&P 500 Index Fund. 500 of the biggest US companies. About 80% of the whole market. This is the classic wealth builder. It has delivered strong long-term returns. But the dividend yield is modest. Usually around 1% to 2% on average. So what if you invest $100,000 here? You let it grow for 30 years. With compounding, it may reach over $4 million. That is life-changing wealth. But dividend income alone grows slowly. You often need very long time frames. Growth engines, Vanguard Russell 1000 Growth. Now we speed things up again. This fund targets growth companies specifically. Faster revenue. Bigger innovation. Larger potential. Tech, communication, consumer platforms dominate here. Dividends are small but not zero. The real power is price appreciation. Historically, returns have been very strong. Well above many broader funds over time. $100,000 here can become several million. Even 8 million or more over decades. But again, the ride is volatile. You trade smoothness for stronger growth. Good for long time horizons and strong nerves. Technology fund, the $100,000 to $13 million path. Finally, we reach pure innovation. The Vanguard Information Technology Index Fund. This fund is almost all tech stocks. Chips, software, cloud, digital infrastructure. The last decades have been tech-driven. Returns here have been explosive at times. Dividends are tiny, but price growth huge. With strong historical growth rates over time, $100,000 left alone for 30 years. Could, in projections, approach $13 million. Most of that would be pure appreciation. Very little from dividends themselves. This is the opposite of John's REIT income. Massive long-term upside, little cash now. Visual suggestion? Why the S&P 500 is so slow for income. Now let's talk about you again. Imagine you don't have $100,000 yet. You can invest just $10 per day. You choose an S&P 500 ETF. It grows well, but pays low dividends. You reinvest everything and stay disciplined. After 10 years, portfolio growth looks decent. After 20 years, it looks impressive. After 30 or 40 years, it's huge. Eventually, maybe after 50 years, you finally reach about $2,800 per month. The net worth is great on paper. But the income took half a lifetime. For many people, that's simply too slow. Building a faster dividend machine with $10 a day. So we design a different plan. Same $10 per day contribution. But now we focus on smart dividends. We build a diversified dividend portfolio. Core holding, SCHD, a quality dividend ETF. Add strong growers like AGM and IP. Include stable giants like Morgan Stanley. And a healthcare leader like AbbVie. Average yield ends around 3%, 5%. Average dividend growth is much higher. Share prices also grow at a solid rate. You reinvest every dividend along the way. After 20 years, the portfolio passes $600,000. And the yearly income passes $41,000. That's about $3,400 every single month. 3 paths to freedom, and the real lesson. Now you've seen 3 different paths. John with his instant $1 million. The $100,000 lump sum in index funds. And the $10 a day dividend builder. The truth is simple but powerful. You don't need the perfect choice. You need a good plan you can keep. Blend growth with reliable dividends. Respect risk instead of chasing extremes. Use time, consistency, and reinvestment as tools. Let compounding quietly build your future. Real freedom is not an overnight jackpot. It's a machine that pays you every month. So start where you are today. Your future self will thank you. Thanks for watching. Subscribe. More videos on investing every day.